at stake, especially for the big pharmaceutical companies. I'd like to just point to this quote. This is the former Attorney General of the United States, Jeff Sessions, with 3 presidents who have indicated that they actually have smoked marijuana and have done this on a recreational level prior to becoming presidents of the United States. The comment, perhaps it's not that easy to judge individuals who are smoking marijuana and tell them that they are not good people just because they smoke marijuana. It's for you to decide. So let's talk about banking cannabis. As of December 2019, in FinCEN's quarterly report at that time, there were 114,859 SARs using the key phrases associated with marijuana-related businesses. There are 3 phrases used when you file a SAR for cannabis. As you all know, 85,000 of those SARs came from the what's called marijuana limited. Those are individuals actually doing the cannabis business and who are banked. That's indicating there are no red flags, according to the FinCEN structure. There were 8,795 SARs using the phrase marijuana priority, which indicated red flags were noted in the business. These would be the standard type of red flag notifications that would be reported in other types of BSA/AML concerns. There were 28,025 SARs using the key phrase marijuana termination. That's indicating the bank found marijuana cannabis was part of their deposits and terminated the relationship with the individual entity that's involved. So of the 28,000, if you look at the math there, you can understand the majority really are SARs dealing with a terminated relationship and or a red flag relationship moving towards termination. 85,000 SARs were filed for ongoing marijuana transaction activity, and that marijuana transaction activity has to be filed on a regular basis as the transactions are occurring, as each transaction is happening with the bank. So on each deposit, a SAR is filed under the key phrase marijuana limited. That would account for 85,000. So what that tells you is there are not that many banking institutions, either credit unions or banks, that are actually involved in banking marijuana. There are obviously some. This is the source that's been listed there for you to go if you'd like to review far more on the FinCEN updates, which occur on a quarterly basis on marijuana. Today, there are 60 FIs currently banking marijuana, as it's indicated by reports and other detail from FinCEN. There's over 700 banks that have been filing SARs. That equates to the information above. The FIs have to conform with the FinCEN regulations. For those of you who have not reviewed those, they are quite complex when you look at what those are. There are a few of those that make it extremely difficult to document and show compliance. For example, one of those is that no sale can cross state boundary or state lines. And so if you are in that structure, you have to be able to attest to that as one of the requirements. The other requirement under the FinCEN regulations is that an individual working in cannabis cannot have even been under suspicion for having violated any of the Controlled Substance Acts in history, in their life. So if an individual was under suspicion for possession of a marijuana joint when they were 18, they cannot work in this space in a banked capacity. The Safe Banking Act, one of the many acts that's been provided to Congress over the years in regard to cannabis, was passed in the House of Representatives May 2019. Since that time, there's been one roll call vote in the Senate. In a roll call vote that's involved, it is not a binding vote, but there was a preponderance of individuals who were there that voted in favor of this, and that was a bipartisan structure. Now, the Safe Banking Act in the House of Representatives also passed in bipartisan Republican Democrat votes. That would indicate that there is support in a bipartisan format for the Safe Banking Act to continue to pass. Both of the candidates for president beginning 2021, President Trump and candidate Biden, have both indicated that they would sign legislation provided for safe banking. It is reasonable to assume that within the first or early second quarter of 2021, there will be a Safe Banking Act passing permitting legal banking of cannabis. So what is the bank-wide risk and what is the reward in this space? Is it measurable and something the bank should consider? Next slide. So here are some base numbers for you to consider. The estimated sales for 2016 were $6.7 billion. The California sales in purely medical marijuana in that time frame were 1.3 to 1.6 billion. Again, recognizing this is a cash industry, predominantly driven by cash, you have to do estimates. The industry is projected by the end of 2020 to be at $20 billion. That would put it on par with the beer industry. That's with current states that are legalized as of today. Next slide. Marijuana is classified as a Schedule I narcotic. The question of when it's going to change is a known question for everyone, but it is not likely to change soon. So it will remain a Schedule I narcotic due to some treaties and trade issues that are involved internationally. However, the Safe Banking Act will bypass that question for the banks. It will basically provide safe harbor for the banks who are doing this appropriately. Currently, 34 states approved medicinal marijuana, and 9 of those states had approved recreational sales. 2 additional states had approved certain forms of marijuana in medicinal level, but not full medicinal marijuana. The payment networks, Visa, MasterCard, currently restrict any payment type of activity related to sales, either acquiring or issuing, through the DDA accounts that are involved. The payment networks have prepared the rules, the MCC codes, and the ability to move forward quickly when the Safe Banking Act passed. The banks are impacted by the federal law. The marijuana-related businesses, as indicated, currently operate predominantly in cash, including needing to use cash to pay vendors and their taxes. It's a public safety and clearly an AML money laundering risk. Third-party service providers provide specialized compliance programs, the services which are overseen by the bank. They do that today. Most banks, for merchant acquiring, outsource that to third-party service providers to do that work for them. That's a simple example. Merchant acquiring is considered a high-risk product, and that the outsourcing of high-risk products to the third-party service providers to manage that with an oversight by the bank is standard practice. So what would you outsource or what would you deal with in this type of a structure? The ability for a third-party service provider to provide KYC and due diligence in some of the complex areas, just as we talked about on social media, other areas that are necessary on the front end are available through many third-party service providers today. Reconciliation of deposits to an impound tax account are important because you are assuring that the taxes are properly being collected, which is one of the FinCEN regulations. That you are verifying that the entity is providing items in a legal, state and federal legal manner. The red flag monitoring and reporting can be provided in a dashboard format to the Chief Compliance Officer, the Chief Risk Officer, BSA officer, so that they can actually see a dashboard each morning and understand if there are red flag concerns with any of their DDA accounts which bear marijuana. In addition, the third-party service provider structure can provide legal and regulatory updates in SAR format for auto filing to assist the bank in that process. What is the solution? To the banks, the solution is a third-party service provider solution. It is easier to manage from the bank's perspective and does not require the scale up of a large FTE component to the bank. For the bank to go through and manage these different elements, the 7 elements you see, which are all required to be managed and monitored through the bank, is complex. If the bank can outsource that to a third-party service provider, the bank can garner revenue while reducing both their element of risk on the FTE component side and the expense structure surrounding that. So at this point, I want to turn the time over to Radhika so that she can actually talk with you about how to build a compliant infrastructure.